You ready, Steve? Uh-huh. Andy? Yeah! Bert? Well, all right, fellas. Well, let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
And good afternoon. Welcome back. Today is Friday, 26th day of March, 2021. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here or right now. If you can't see the screen I have up, go to our homepage at cfrn.net. On the right-hand side of the page, click the big microphone, follow the instructions. You'll be registered in about 30 seconds, and that will give you one-click access to the show each and every day. You'll also have access to the chat box so that you can ask questions and participate in the discussion. On the days you're out of your office, away from your desktop, not to worry, point any internet-connected browser to cfrn.net/live, and there you'll find a live, real-time simulcast of the show as it unfolds. You just won't have access to the chat box. We do stream live on our YouTube channel during this broadcast. That's youtube.com/CFRN. Not only do we stream live there during the show, but we archive each and every daily show on our YouTube channel. Currently, we have over 1,600 daily shows archived there for your viewing pleasure. If you happen to be listening to this broadcast after the fact as a podcast, and you want to be able to see the charts, hit pause on the podcast player and just point your browser to youtube.com/CFRN. While you're there, hit the subscribe button. That does two things. It helps more people find us, and anytime we go live with late breaking news, something big happens, we have an unplanned broadcast, as a subscriber, you'll be notified. So, with that, let's open with a word of prayer. Heavenly Father, we thank you for your blessings, your mercy, and for your grace. We thank you for your love. We thank you for blessing our lives. Thank you that your favor has no end, but lasts our entire lifetime. Forgive us for sometimes forgetting that you are intimately acquainted with all of our ways, that you know what concerns us, that you know us better than anyone else, and that you cover us as with a shield. We ask for your guidance so that we might walk fully in your blessing and goodness today. We ask that your face would shine on us, that you would open the right doors for our lives and for our loved ones, and that you would close the wrong doors and protect us from those we need to just walk away from. Establish the work of our hands and bring to fulfillment all that you've given us to do. We pray that you would make our way purposeful and our footsteps firm out of your goodness and love. Give us a heart of wisdom to hear your voice and make us stronger by your favor and grace. In Jesus' name we pray. Amen. Well, here it is. Happy Friday. Another week. Let me give you the numbers from around the world. the cash markets, the indices as they're called. Starting here at home in the US, the Dow is up 149 points. NASDAQ is up 35. S&P 500 is up 22. And the Russell 2000 up 21. There it is again, our man in the street, the only mover and shaker in the bunch, just shy of 1%. In the commodity basket, crude oil up. Crude has been so incredibly volatile. Crude up $2.47, trading 61.03 last. That's a gain of 4.25%. Gold up $7.70, trading 1732.80 last. Silver up 6 cents, trading 25.11 last. In the Asian markets at the close, Nikkei posted a gain of 446 points. That's 1.5%. The Shanghai rose 54 points, 1.5%. The Hang Seng up 436 points, once again, 1.5%. And in the European markets at the close, FTSE up 53, DAX up 116, the CAC up 27. That gives us a green day in Asia, a green day in the UK, and so far it is a big green Radio Friday here in the US of A. So with that, we'll go to Michael and get a recap of what happened this morning in the live training room. After that, I'll come back. We'll go over the logic alerts, the concierge trade alerts, everything that's happened in the last 24 hours and this week. And I spoke to Garrett on Wednesday, and he's scheduled to come on the show today, Friday, but I haven't spoken to him yet today. So while Michael's doing the recap, I will reach out to him and see if his plan is still to join us during the broadcast today. Michael, if you're ready, you can take it away. And if you are not quite ready to take it away...
I am ready. I'm ready. I can take it away.
He's ready. Okay.
Let me just change the name. I'll do that really quick.
Yeah, I had to do that. I had to change it the other day so I could take care of that one thing.
Yeah, I know. It's kind of every 3-year kind of thing. All right.
Okay.
All right.
I can see your charts, and it's all yours.
Great. Okay, here we go, guys. Let me start out with my other thing. Here it is. All right. Good afternoon, everyone. Today is Friday, the 26th day of March, 2021. If you're not taking a free trial with us, go to the homepage at cfrn.net. Scroll down to where it says free 5-day trial, no credit card required. Click on that, and you'll be brought to this page, eminitrainingschool.com. On this page, all that we ask for is your name, your email, and your phone number. You can tell us the biggest training challenge, so we can tailor one-on-one training just for you. You can type it right in here. It can be just one line, and we'll set up the one-on-one training, and we'll get you pointed in the right direction, hopefully. All right, hit that send button, and you'll be sent a confirmation link. You must click on the confirmation link, all right? If you don't click the link, we don't know that you took the free trial, so you got to click on that link, all right? All right, spreadsheet. If you're going to read the spreadsheet, you could read all the CFTC risk disclosures down at the bottom, okay? Today was kind of a tough day. I probably had more stuff out today than I did the whole week coming into today. Anyway, today, well, first, if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures at the bottom. Today's the 26th day of March, 2021. Made 6 ticks in crude. 6 ticks. Yeah, 6 ticks in crude, 27 ticks in gold, and we lost 8 ticks on the ES. And that put us at plus 230 on the morning session. Today it took 38 minutes and 4 trades to get to the goal for the day. At that point, we're up $100 a contract, and we took a total of 14 trades this morning. So on the month now, we're at $19,327. That's over 20 trading days, averaging $966 per contract per 2-hour trading day. We've now gone 57 out of 58 possible days of getting our goal for the day this year. And on the year now, we're at $50,812 a contract. That's over 58 days, averaging $876 per contract per 2-hour trading day. Okay. All right, so with that, we'll get into the actual trades that we took, and we'll start out with gold. Okay, on gold, right here. Our first trade opportunity on gold today, we picked up 5 ticks right there. Then I was highlighting areas in here where I thought price was going to go to, and it did eventually go to all of them. And the last one that I highlighted was as we ended the session, it was way over here. But the next trade in gold was right here. We picked up 3 ticks on that to put us at +8. Then we stopped out, put us back down to break even. I missed a trade there. Picked up 1 tick there and 5 ticks there to put us at +6 on the morning session. Right, this was right at the end of the session. I missed that short trade right there. Now I had highlighted all these areas, so they were all potential areas that price should go to. All right, so now we get into crude oil. Okay. Crude started out really choppy, and I was highlighting areas that price should go to, and it did actually go to, but it just didn't give us trade setups. Now, our first trade here on crude, we picked up 12 ticks, then we had a break-even trade. Then if we extend this out a little bit, it did eventually get up to that target area. We missed a trade here. We stopped out on this one. On crude, that put us, let's see, where were we? Here we started with +12, then we had to break even. Then we had a stop out. There's a trade that I'm missing in here somewhere. We went from 12 ticks to 23 ticks. So we had an 11 tick win somewhere in there that I didn't put in. I don't know where it is, but it's in there somewhere. We picked up 11 ticks, and then we stopped out, and that put us back down to 15 ticks. Right then we had to break even. We picked up 5 ticks. That put us to +20. Then we picked up 4 ticks. That put us at +24. Then 3 ticks to put us at +27. And then a break even, and that was it. Then there wasn't anything for me to highlight target areas to go to during the break. So just look and see what it did do during the break. Looks like it had a short right here and a short here. And that was about it. That was about it. Not a lot of opportunity today in any of the markets, really. On the ES, let's go all the way back to the beginning here on the ES. Our first trade on the ES was right here. We stopped out and we didn't have anything. We had 1 break even opportunity right there. I didn't get. We did have a break even here and another break even here, and that was it. There was no more opportunity on the ES today. I had highlighted these areas before the end of the session this morning, but there really wasn't, price was right here when I was highlighting them. So it wasn't really a big shake for them to get to them. During the break, 1 long trade here, 1 long trade here, and then a bunch of nothing. Okay, and that was all that we had on the ES this morning. All right, so we'll go back here, and if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today is the 26th day of March, 2021. Today we made 6 ticks in crude, 27 ticks in gold, and we lost 8 ticks on the ES. That put us at +230 on the morning session. Today it took 38 minutes. I'm sorry. Yeah, 38 minutes and 4 trades to get to the goal for the day. At that point, we're up $100 a contract, and we took a total of 14 trades. On the month now, we're at $19,327. That's over 20 trading days, averaging $966 per contract per 2-hour trading day. Okay, so we've now gone 57 out of 58 days so far this year, getting the goal for the day. And on the year now, we're at $50,812. That's over 58 trading days, averaging $876 per contract per 2-hour trading day. Now, if you've not taken a free trial with us and you want to, you can go directly to this page, eminitrainingschool.com. And on this page, all we ask for is your name, your email, and your phone number. You can tell us the biggest trading challenge so we can tailor one-on-one trading just for you. Hit the send button, you'll be sent a confirmation link. You must click on that confirmation link, okay? If you don't click that link, we don't know that you took the free trial, so you have to click on that link, all right? All right, and that's it. With that, we can pass it back out to Studio A in fabulous Phoenix, Arizona, overlooking South Mountain, America's largest city park. Right, if you are ready.
Yes, sir. I am ready. Recap of the recap.
Today it took 38 minutes and 4 trades to get to the goal for the day.
Good job. Once again. Okay, guys, I did talk to Garrett, and Garrett is going to join us here in about an hour. This week, Logic 247. For the uninitiated, Logic 247 is our around-the-clock, 24/7 Emini alert service, which provides you with windows of opportunity to trade the market while you're learning our methodology and our strategy. The alert channel opens Sunday night at 6 p.m. Eastern, remains open around the clock throughout the week until Friday afternoon at 5 p.m. Eastern when the global markets close. Most traders are waiting for Monday morning to come along, 9:30 a.m. Eastern, and then they have X number of hours till 4 p.m. in the afternoon to get their work done, and then punch out, go home, come back, try another day. The world of futures is completely different. You're not chained to a time clock or to a desk. You're simply on the hunt, always, for the next window of opportunity. It doesn't matter if it's in the S&P or crude oil or gold or silver. It doesn't matter, because price flows the same on every market and every time frame. From the daily S&P to the 1-minute pork belly, price goes from support to resistance, back to support, back to resistance, again and again, over and over in a never-ending cycle. The purpose of the alerts is to teach you to spot these windows of opportunity. When your telephone, your tablet, your PC, or your Mac makes the telegram sound, dee-dee-dee, it's not a call to trade yet. It's a call to go look at your chart, because opportunity is presenting itself. I build in time to every logic alert for you to get done with what you're doing, get to your desk, get your charts up, and see it happen live in real time. Now, when you first start with us, you should not be trading real money because you haven't learned the strategy yet. You should be trading in your simulator, but you should be trading, okay? The more times you hear that sound, go to your chart, read the alert, look at your chart, read the alert again, study it, and then trade it through in the simulator. Pretty soon, that sound, when that telegram sound comes, it's not alerting you to a window of opportunity. Because if you're sitting there staring at the charts, you've already seen it. The alert actually becomes a confirmation that you are seeing what you thought you were seeing. And the more times you repeat that process, pretty soon you get to the point where you don't need anybody. Not me, not Michael, not Valerie, not Bert, not nobody, not nowhere, not know how, to tell you when to get in the market or when to get out of the market. Because you got eyes, you can see it, right? Well, in the beginning, no. But over time, with Michael's training 2 hours a day, every trading day from 9:30 a.m. to 11:30 a.m., that's 10 hours of live training, interactive training. It's not just sitting and watching a video or watching some guy trade. It's interactive in that you're trading along with him, you're asking questions, you're learning. It's a learning experience. Layer on top of that 2 hours in the afternoon where you can also ask questions. That's 20 hours of live training a week. Plus 2 hours, members only on Thursday night, 22 hours. And if there's anything that you can't get your brain around, wrap your brain around during those 22 hours, as a member you have access to unlimited one-on-one mentoring sessions. No trader left behind. That's what we believe. Now, this week, which is week number 138, and we're just shy of hitting our 7,000th alert. I'll look at the exact number here in a second. But so far this week, since Sunday night, we've issued 70 alerts, 15 never triggered. Still waiting on the outcome of 1. So we've had 54 actionable alerts, 54 alerts that actually triggered, of which 17% were stopped out based on not risking more than $300 per contract, per trade, less when possible, based on market structure and a very simple 3-step process that we teach all of our members. In the live training room, Michael teaches you that you must always have a hard stop in place. Otherwise, it's not trading, it's just gambling. So he's ingraining that into your thinking. You must have a hard stop. To keep it simple in the room, because you're trying to learn the strategy, we just use an 8-tick hard stop across the board on everything, every market, every trade. So you don't have to think too much about it, okay? You just set your bracket up, and then every time you get triggered into a trade, long or short, immediately your stop's in place, your target's in place. Now, on the alerts, which are based off of a 30-minute chart, we don't want to risk more than $300 per contract per trade, but we want to risk less when market structure allows us to. And that's where the 3-step process comes in. Now, think about this, okay? 36 got an FT designation, 9 got a PT, 9 stopped out. So if we add these two together, let's call it 18. I think that would be proper. 9 plus 9. Sure, we'll call it 18. Doesn't matter what they called it in the past, we'll call it 18. Now, let's say that the average alert got you a $300 profit. Now we know that some alerts only make it to the initial target, $100, in queue $200. Okay, but we also know that some alerts run 500, 600, 700, 1,000, several thousand. Okay, you see it every day here on the show when I recap the alerts. But let's just say the average profit on these 36 was $300. That would be $10,800. 36 times. Now I did this once this week, and this is the last time I'm going to do it, because I don't want you to start trading this way. What I want to do is I want to joggle your noggin and remind you that this is a business based on probabilities. Too many are still too concerned with the outcome of the next trade. You've got to get away from that. It does not matter what the outcome of the next trade is, because we know that getting stopped out is as much a part of trading as breathing is a part of life. And so whether if the next trade generates a huge profit, okay, it's just another trade. If the next trade gets stopped out, it's just another trade. Too many of us allow our future, our career as a trader, we let it hang in the balance every time we click the mouse to go long or short. You've got to get your focus off of that and look at the big picture. Whether your measuring stick is, weekly or monthly or quarterly, whatever it is, your focus should not be on the outcome of the next trade. Your focus should be on the process. If you focus on the process, the outcome will take care of itself. Because this is a business based on probabilities, and you have what most traders don't have, a definable edge with a sample size approaching 7,000 alerts. Now, if we add these together, that's 18. We already clarified that. And let's say, now, we don't want to risk more than $300 per contract per trade, but we also want to risk less when the chart allows us to. But let's just say on every one of those that we risk the full amount, $300. 18 times 300 is $5,400. And if you subtract 5,400 from 10,800, you're probably way ahead of me. That number's $5,400. So that would be based on you trading every actionable alert, which is pretty much impossible because the alerts come out around the clock. While you're sleeping, we got day traders in the UK and vice versa. Our day session, their night session, right? So alerts are coming out around the clock. So you're human, you have to sleep. But we're talking on a percentage basis, okay? If you averaged $300 at every profitable trade and lost $300 on every unprofitable trade, the net this week before commissions, based on one contract, would be $5,400. Okay? That's not bad. Well, once you earn the right to trade 2 contracts, that would become a $10,000 figure. And over time, you know, if you continue to add contracts as the blueprint tells you it's okay, and you have profits to add with, this week, if you've earned the right to trade 10 contracts, that number would be $54,000. I'm not suggesting, and this is why I'm not going to just bring it up again, okay? I don't want you risking $300 on every trade, and I don't want you jumping out of every trade at $300 that offers you more, because then you won't end up with an average of 300. But what I want you to see is that you have a business based on probabilities. You have a definable edge that has averaged over the last 138 weeks 20% of alerts do get stopped out. This week we're at 17%. This right here, this should help you to get your focus off the outcome of the next trade and get your focus where it needs to be. And that's on the process. Okay? Focus on the process. The outcome will take care of itself. Now we also have a different type of alert called the concierge trade alert. But let's run through these real quick first. Today, because of the condition the market's in, all I put out so far is the Dow. It's a stop out last night on gold. I'm not going to go through each one of these. I did that yesterday and the day before and the day before. But just so you know, if you're new, how to read the alert. This is alert number 6,985. So the next alert will be 6,988. So I guess that puts us 12 alerts away. So we should hit number 7,000 probably Sunday night, unless something gets real busy this afternoon. B means buy, T means initial target, PR, second target, potential resistance, third target, final trade 2 target. So you got 1, 2, 3, 4 targets. Now that was a long. Let me find an example of a short. Thumbs up means, well, I guess you probably know what a thumbs up means. Z's means no trigger. This was to short the S&P at 38.66, but it didn't drop to 36.66, so it didn't trigger. Initial target, potential support, second target, potential support, third target. On every short trade, the final trade 2 target will be the weekly zone below. And on every long, like this, it will be the weekly zone above. Okay? It's very simple to read. There's either thumbs up, a red X, or the Z's. And this is the whole week I'm scrolling through. Now this is public information. Anybody can look at it. If you're on the trial, you have access to the alert channel. You can see all 7,000 alerts we ever issued. Almost 7,000. Now last week, week 137, we issued a total of 68 alerts. 11 never triggered, 1 carried over. We had 56 actionable alerts. And if we did that same math, 12 and 7 is 19. So the math's pretty close to the math we just did. Go 37 times 300, and go 19 times 300. Let's see where your math is. It's pretty close, right? It's a business based on probabilities. And you have a definable edge if you're a member, if you're learning, if you're showing up for class, if you're asking questions, if you're participating in the discussion, okay? And this is where our week started. Sunday night, 6 p.m. Eastern, Globex opens, the channel opens, stays open until Friday afternoon at 5 p.m. Eastern. Now, this is our original alert service, the concierge trade alerts. This is a static report issued at the beginning of the Globex session each evening. Last night I got them out 15 minutes after the open. There's 2 numbers for each market. The way to handle it is go put a line in the sand at 39.18, put a line in the sand at 38.83. These are based on historic price action. The logic alerts, which come out around the clock as opportunity presents, those are based on current price action. When this report is posted and you go put your lines in the sand, if price starts trending towards 39.18, that's bullish. That means logic is only going to be looking for long opportunities. If price starts dropping to 38.83, logic is only going to be looking for shorting opportunities. Above 39.18, nothing but longs. Below 38.83, nothing but shorts. Same for the Dow, for the Russell, crude, NQ, gold, silver. All right. Let us go where we go most days this time. And on daily chart, if you leave your charts running overnight, refresh the chart by going to any time frame, doesn't matter, and then go back to daily. Okay? Bearish engulfing took us to the BBC, took us to red and falling. I've covered this in detail every day this week, so I won't go deep on that right now. But if you've missed the shows this week, I mean, really you should go all the way back to this show, the 16th, the day this bearish engulfing was developing. It took 1, 2, 3, 4 sessions to get back to the BBC where we expect good support. That good support took us to red and falling, which we expect to be good resistance. Okay. We finally found a bottom. And the next rally began. See, this was a leg up, retracement, another leg up. Context, uptrend. Context, uptrend. Bearish engulfing again. The bearish engulfing candle on a daily chart. Oh, you know what? Hey, let me just pause here for a word from our sponsor. No, I'm just kidding. I talked about this in the discussion group, but I don't think I've showed it to you guys here. Let me blow your mind. No, it's not that big a deal. Monthly. I've got to use the continuous contract because we just rolled. But now the other day when I posted this, the body of this candle was red. Now you see the high of this candle this month is 39.78 half versus last month 39.59 a quarter. So this month had a higher high than last month. And the low of this candle is 37.10 and a half. The low of last month's candle is 37.60. We have an outside candle. Now, when I initially posted this the other night in the discussion group, we had a little red body. So we had a bearish engulfing on the monthly. Okay. But as we rolled into the end of the month, things have changed. Now we've still got, let's see, 30 days has September, April, June, and November. All the rest have 31. So 27. So Sunday will be the 28th, 29th. So what do we got till next Tuesday? Okay, so if something happens this afternoon, Sunday, Monday, Tuesday, if this goes red, if this body goes red, we will have a bearish engulfing candle. It's been bearish already this month. Okay, I mean the body was red. This was red all the way down. It was a big red candle. Now the month started out with a bump and then a drop. And once we got below where the candle opened for the month, it's a big red candle. But where did it find support? Blue and climbing, step line. Monthly. Price flows on a monthly chart the same way it does on a 1 minute chart, a 30-minute chart, a daily chart. Support to resistance, back to support. So we found support where we expect to find support. We look at it, see it all the time on a 30-minute, on the daily, on the 5, whatever. So these next few days are going to be really important, because if we do end up this month with not just an outside month, that would just be a continuation signal. But if Sunday night, Monday, Tuesday, if this thing goes red, we have now think about the drop, 3,600 to 3,400, except we're setting up at right now 3,900. So if we go from 3,900 to 3,400, that's 500 S&P points. That's 5,000 Dow points. Some might say the world is falling, or the sky is falling. All right. So, real important. We'll keep watching it. So back to the daily. Bearish engulfing took us to the BBC. We expect support. We got it. Bounced. We expect resistance. Got it. Boom, boom, boom. Bearish engulfing. BBC, support. Resistance at the step line, which sends us back to support at the BBC, which sends us back to resistance at the step line, which sends us back to the BBC for support. And the support at the BBC sends us looking for resistance, which is right there, red and falling. Just as red and falling was resistance here, here, that's what we expect until proven otherwise. Now, does this mean that price is going to, let's see, the red and falling is at 39.34. Does that mean price is going to stop at 39.34 on a dime and turn? It could, but it's an area, okay? Like here, we hit it, seems almost to the tick, and then the next session opened and we ran up a little bit, but by the time the session closed, bang. Oh, now here, let me point this out, because you hear me talk about context, and I know sometimes maybe, what does that really mean? Okay, you see how we had this huge up move and then a bearish engulfing. Here, we had a huge up move over many days, bearish engulfing. Here's a bearish engulfing candle, but there's no context. In other words, an outside candle or an outside day without the proper context is a continuation signal. And so this was an outside day, but not a bearish engulfing, because there's no context. I mean, you had 2 days of rally. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days moving up. 1, 2, 3, 4, 5, 6, 7, 8, 9 days moving up. See, context. Now we're getting ready to hit this thing, 39.33. The next weekly zone overhead is 3950/51. So we know where resistance is. If we get through red and falling, then we're going to look to the swing high here and here. It's 3940. And if we can take out red and falling, if we can take out these swing highs, then we'll have a nice window of opportunity to trade along up here. If this gives us the resistance we anticipate, it's going to send us back to the VBC. Where, look how, now we talked about 5-6 different reasons why this was a major support area. And it held once, twice, 3 times, 4 times, 5 times. It's held. Now we did make the drop on yesterday to the 50% fib retracement of the last leg up. Okay, right there. Pretty as you please. And in the discussion group, we discussed before it happened. See, we're not the woulda, coulda, shoulda guys. We talked about it before it happened. That with all these reasons for support, if it fails, then it's going to probably be a fast move down to the 50% fib retracement. Institutional buyers, deep pocket buyers, watch a daily chart the way most of us watch 30-minute charts, or 5-minute charts, or 1-minute charts. And when they see a 50% retracement, they're going to come in. Now, if you don't understand Fibonacci, book a mentoring session. I can teach you enough in a couple of sessions, enough to help you trade. You know, I may not give you all the history and blah, blah. You can study that yourself on the internet. But you don't need to pay $20,000 for special fib software. Every platform I've ever seen comes with the basic fib tools. Okay. Now, I showed this last night, or we talked about it last night. Let me see if I can scroll up and find it real quick. Yeah, here it is. Okay. Yesterday morning, I posted this in the discussion group. Okay, you see this candle here? It's got this wick touching the 50% fib. This is what it looked like yesterday morning. It was a big red candle. This green body up here didn't exist. Okay? Red candle down to the 50. Then a few hours later, I snapped this picture. Buyers came in at that 50% fib and drove price up. So there was just a little tiny red body. And by the time we did the workshop last night and we were into the Friday candle, look at the Thursday candle. It went from being red to a little red doji with a long wick to the downside to this. Now, our whole thought process was, if, with 5 different reasons for support, if price overcomes all of them, then no reason we don't go to the 50. We did. And if we go to the 50 on a daily chart, the 50% fib retracement of the last leg up, that should give us one heck of a bounce. Well, we bounced from 38.40 to 39.35. That's almost a 100-point bounce. That's almost 1,000 Dow points. And now we're at resistance. We went from this to this to this. Always look at your daily chart when you start your trading session. I don't care if you sit down and trade in the morning, the afternoon, the evening, middle of the night. Go to your daily, get your bearings, identify major resistance. Major resistance right now is 39.35. That's an area. And then the high of this day is 38.75. And the high of this day come on, 39.44 half. And then the all-time historic intraday high. You really don't have to make your trading any more complicated than this. Identify, if you believe the price flows from support to resistance and back again, if you believe price flows the same way on a monthly chart as it does on a 1 minute chart, then if you truly believe that, once you learn to identify where the next major support and resistance should be, it doesn't make it easy. Trading has no easy button, but it can be simple. There's a hard way and a simple way. There is no easy way. Okay? All right. Now, what happens if this does turn out to be the resistance we think it will be? Okay? Then how do we close today? Because if buyers stop buying, just as over the course of one day, this red candle became this green candle, okay? This green candle, if buyers stop buying at this resistance area and the sellers come out of the woodwork and start pounding it, we could see the reverse of what happened yesterday. In other words, this green candle could turn into a red candle. This is not a forecast. This is an observation. Embrace the possibilities. So once you identify your resistance overhead, now where's your support? Okay? Step line, low of day, BBC. And these other 5 reasons here aren't going away. They're still there. Okay? All right. So with that said, let us go now to the 30-minute chart. Okay. All right. If you're not a member, you want to be, go to eminifuturestrading.com. With the click of a button, you can become a member of the family. You can be in the trenches with us Sunday night, 6 p.m. Eastern, when the Globex market opens, with alerts flowing to you in the channel, people there to answer your questions, encourage you. It's a good environment. All right, S&P. That's the next weekly zone overhead, 3950/51. But what do we know? Hey, what do you know, Joe? 39.35. Okay, so let's put something there, some kind of mile marker. Okay, 39.35. So we want to identify that on our 30-minute chart as daily red and falling. We expect that to be good resistance. If it can trade through it and then hold a pullback, then we'll put an alert out to be long. Oh, I've got to wait for market structure to show me where the entry needs to be. We've got to do battle here. This will be a battle zone, okay? Well, is it possible price could rip through it as if there were no obstacle there? Yes, that is one of the possibilities. So we'll see. Could happen. But if it does rip through it, then I will expect price to retrace back to this area. And then instead of it being the resistance we thought, it becomes the support that we now want. And then that gives us an opportunity to trade to the zone overhead. So what happens here in the next few minutes will be quasi important. Okay, last night on the CTAs, the long side, the long line in the sand was 39.18. 39.18. Okay, the alerts came out last night, 15 minutes after the market opened. And the market opened right here, 1800 hours on March the 25th. And the number was 39.18. So let us draw a line at 39.18. There we go. By 39.18. So from 39.18, we put in a swing high at 21.5. So that's 3.5 points. Now, because all of our traders knew there's a weekly trading zone there, we expect there to be resistance there. What happened is exactly what we expect, but there was an opportunity to take a few points out of the market, and so, to those of you that did, that bell's for you. Important prices, important areas are almost always tested. We went over this in the workshop last night. Once an alert triggers, there's a greater probability of it triggering again and again, even again. Price gets below the trigger, triggers again. This time it runs up to 27.5. I was at 9 points, $50 a point, $450 per contract traded. Back below the trigger, support at the BBC. So far, we're up to 33. So at 15 points, at $50 a point. So 3 tradable events, 1 alert. We walked through a bunch yesterday, like last night in the workshop. If you missed the workshop last night, it was good. Let's check it out. Okay, so we got 1, 2, 3 triggers. Now the short side was 38.83, and so we can see we haven't touched that this session. So we're coming into that resistance, but let's go ahead and look at the Dow. Let's try that again. Look at the Dow. Okay, nice. So I think that one weighting just hit its target, if I'm not mistaken, on the logic. Okay, 32,705 on the Dow. That was the line in the sand. 32,705. Okay, 32,705, and we put in a swing high at 45. So that's 40 points, $5 a point, $200 per contract traded. Back to the BBC, support, off we go again. This time we got 43 points, $5 a point. 1 trigger, 2 trigger. The short side on the Dow was 32,220, obviously never triggered. Okay. Now we go to the Russell. Okay. CTA last night for the Russell, 2206 on the long side. 2206. $22.06 up to the zone, 22.06 to 22.11. These zones are given to our members Monday morning, 6:15 a.m. Eastern. They don't change all week. Fixed support resistance. If all you got for the price of a passport were the weekly zones, I think you'd find it worth every penny. But you get so much more. Okay. So again, from 06 just to the zone, it's 5 points, $50 a point, $250 per contract traded. Now I did go further, went all the way up to 22.20, so that's 14 points, but just using the zone as the measuring stick. What does it do? It gets back below the trigger, does it again. This time it puts in a high at 22.15 so far. So that would be 9 points. $50 a point, $450 per contract traded. Once an alert triggers, there's a greater probability of it triggering multiple times than not triggering multiple times. Now, on each one of these, and on the Dow and on the S&P, once you had some profit in the trade, if you moved your stop to break even, what happened? Oh man, I got stopped out. Okay, Okay, so it starts to run again. All right, this time it's going to do the deal, man. So you move your stop, break even. What happened? Get stopped out. Now, in the morning in the live training room, we use aggressive risk management. Michael teaches you, once you have 4 ticks profit in the trade, you move your stop, okay? Because he's teaching you to get in, get your points, get out. Get in, get your points, get out. The 30-minute chart requires a lot of patience, self-discipline, okay? It's sort of a different world. Now, the principles are all the same. Everything under the hood, the underlying principles, the strategy, the methodology, it's all the same. The only thing different is the time frame, how we determine the stop loss, and the amount of available profit. Okay? I don't know how many times to say it or any different way to say it, but I said this the other night in the discussion group, and it became a question last night in the workshop. The question was, you wrote, if you move your stop to break even, and I was referring to, and I probably didn't clarify that I was referring to the 30-minute charts, that if you move your stop to break even, you're most likely going to get stopped out. And the question was, well, what do you mean by that? This is what I mean by that. I go back to the S&P. As this thing started to move up, if you had moved your stop to break even, you'd have got stopped out. On this one, if you moved your stop to break even, you'd have got stopped out. Okay. On this one, if you moved your stop to break even, you haven't got stopped out yet. So either leave your stop alone. If you're trading the alerts, leave your stop alone, or pay yourself as the market makes money available. Okay. 1, 2, 3 opportunities to take a profit out of the market, and or 2 opportunities to get stopped out at break even. And still, now again, I don't want you to change what you do in the room. If you're trading with Michael in the room, then follow to the letter exactly what he teaches you. Okay. But when you start trading the larger time frame, you're going to need to book mentoring sessions with me so that I can work with you on market structure, so that you understand what to do with that stop. Okay? All right. Look at what happened here. That was one bullish green candle. And people around the world are shaking their head going, what happened? Well, we know what happened. That happened. Are we surprised? Why would we be? It happens over and over, again and again. Why fight it? Hopefully, if you're along this move up, you took your profit up here. Not saying we won't go back and challenge it again. We might challenge it multiple times. If it becomes insurmountable in the eyes of the buyers, they won't just keep throwing money away, because to move price up takes financial commitment. And if buyers see that, you know, they're buying and buying and buying and they're not moving the needle, they're going to take their foot off the gas. And when buyers take their foot off the gas, sellers come in out of the woodwork and they do this. See, big green candle hits red and falling. Look at the next session. Next 2 sessions. Yeah. Over here. Buyers stopped buying, sellers took over. Buyers stopped buying, sellers took over. Buyers are still in the driver's seat, but they got a huge obstacle right overhead. Okay. All right. So we made it all the way to the Russell, right? Yes. So now let's go to the NQ. Now this one, okay, profitable. Now, but see, either one of those, moving your stop. Okay, but here comes a third. Looks like we're going to get a third attempt And because the S&P is the ringleader of the big four, S&P, Dow, Russell, and Q, knowing what a huge obstacle the S&P is facing right now might color your vision a little bit on how you deal with this. Okay. All right, so let's go to the NQ. Here we are. Now this trend line up here, I don't remember when I drew it or what it represents. So I guess I'll just delete it. Oh, that was from something way back over here. Okay, I'll clean my charts up over the weekend. Okay, so the CTA last night for the NQ, long above 12,875. 12,875. Wow, we didn't get much there. Often the CTA will be like an iron curtain. 12,875. Like this. It's either an iron curtain that churns price and sends it scampering in the other direction, or it becomes a gateway to everything above or below. Okay? That's how you should look at this. Important price, important area. Price gets above it and can hold a little pullback, then the upside is your hunting grounds. But when this happens, and it does, the short side on the NQ was 12,732. 12,732. Okay. So 12,732, and we dropped to 12,715. So that's 15 points, $20 a point, $300 per contract traded. And then price got back above the trigger, did it again. This time it dropped from 12,730 to 680. So that's 50 points at $20 a point. That's $1,000 per contract traded. So the first one, again, 15 points, $20. It's a $300 per contract trade, then $1,000 per contract trade. That's what the market made available. That's with one contract. With 10 contracts, that's a $3,000 move. 10 contracts, that's a $10,000 move. Now, the worst thing you could possibly do is buy a passport and start trading real money Sunday night. That would be a huge mistake. Don't do it. Just don't. As Nancy Reagan used to say, just say no. You need to learn the methodology and the strategy first. When you become a member, when you become a passport holder, that's unlimited lifetime access to everything we do, everything we've ever done, and anything we might do. There's no recurring monthly fee, annual fee, no fee. It's fee free. You pay once, member for life. End of story. Unlimited one-on-one mentoring sessions. You can also get what's called the 24/20 blueprint. That's going to help you write your business plan, your trading plan, and it's going to monitor your trading activity. It's going to help you monitor it. Your initial goal, as you're learning the strategy from Michael, teaching you 2 hours every day, your initial goal is to put together 10 consecutive days in a row where you reach your goal in 10 trades or less. Once you do that, the blueprint will give you the green light to go live with one contract. Now your goal is to increase your account balance, real money, by $2,000. Once you do that, the blueprint will give you the green light to add a second contract. The difference between the first contract and the second contract, it's huge. It's like a rite of passage. It's like your bar mitzvah or something. It's huge because the second contract is being funded or underwritten by profit you earn in the market trading one contract. The blueprint will tell you when it's time to add number 3, number 4, number 5, number 10. But you only add one at a time, and you only add it when it's time, and you only add with profit you earned in the market. If the blueprint ever tells you it's time to add and you don't have the profit available to add an additional contract, you need to book a mentoring session so we can help you figure out why. Once you go live, if you ever have 2 days in a row, back to back, where you don't reach your goal, 10 trades or less, you should come out of the live market, back into the simulator, and immediately book a mentoring session with myself, Michael, Valerie, Bert, any of us, all of us. Okay? It's not a walk of shame. It's a smart business decision. Something's not right. We need to figure out what it is, help you get on track, get your confidence back, and then you step right back out where you left off. Now, there's all kinds of methodologies and strategies and indicator sets and groups and gurus and whatnot out there that you can spend your money on. I don't know of any of them who, if you have a couple rough days in the market, are going to literally come running to your rescue. But we do. Our goal is to help you become self-sufficient. Our goal is to help you no longer be prey for all of the vendors that line the street on the way to Wall Street. You've been taken advantage of. You've been lied to. You've been stole from. Only you can say, enough's enough. Only you can say, I'm done with that noise. I'm done with the parlor tricks. I'm done with the magic acts. I just want to learn how to trade. No smoke and mirrors. I just want to understand. And that's, if that's where you are, then you should be calling Valerie at 949-42-EMINI, emailing support@cfrn.net. I don't go through these every day just to, entertain you. I go through these every day to show you the real money. If you're already a member, every one of these alerts that I just went through was in your Telegram channel last night. And if you're not a member, it could have been in your Telegram channel last night. Okay? So, whatever you've done in the past that didn't work, don't beat yourself up. Okay? It may have taken a lot of time and a lot of money, but now you know, you absolutely know what does not work. Okay? If you're ready to do something different, call Valerie, 949-42-EMINI. And just tell her, Valerie, I'm ready to do something different. I'm sick and tired of being sick and tired of money I've spent, the time I've spent. I'm no closer to being a profitable trader today than I was. PT stands for partial target, Mike. PT. That means it got 60% of the way to the initial target. 60% or better. That's a PT. If it's anything less than 60%, and that's just a plain old stop out. So in that math that I was doing, I was lumping the PTs, which there's profit in them, but I just went ahead and lumped them in with the stop loss. Okay? All right. All right, Garrett's going to be here in 5 minutes, so let's real quick go to crude oil. And the numbers last night for crude was crude long 61.60. We haven't got there yet. Long 61.60, and the short side was 56.70. So no trigger on the crude CTA. And now we go to gold, and we're at a zone. That's a current weekly zone, 1732, and below is 1717/18, and then the next zone overhead this week was 1739. Which is right in there. Okay, so we've been consolidating here for a couple hours. What's the high probability move from here? Well, if price can't get through this resistance, which it seems to be struggling to do, pull back to the BBC. Price firms up, and then we have a tradable opportunity back up to the zone. But we have to be patient. Either price is going to come back to the BBC and potentially give us a long trade, or buyers are going to power through, and then we'll have a trade from like 34 up to 35 up to the zone. If we pull back to the BBC and it fails to hold, well, then we'll have window of opportunity down here. The number last night, the CTA number for gold was 1735, and the swing high was 35.5, $50. That's all there was. Short side was 1723, and that happened here. 1723. So we put in a swing low at 21, so it was $170 per contract traded. And then from 1723 we dropped to 1719. That's $400 per contract traded. And then last would be silver. Here's the S&P again. Still trying to get through that daily red and falling. Okay, so the first attempt failed. Here's the second attempt. Buyers have not given up yet. As long as you see green printing on this 30-minute chart, buyers have not given up. Okay, so silver. Last night, the CTA on silver was to be long 25.31. Swing high was 33. 2 pennies, $100. I would see that more, rather than a successful trade, I would look at that more as like the iron curtain. Just turn price back down. Then the short side was 24.90, which was also the iron curtain. Turn price back up, and there's 24.90. Okay. Let me look and see if Garrett's here. Well, guys, keep John in your prayers. I called him twice this week. He didn't answer. And in the 20 plus years I've known him, there might be 5 times that I've ever called him that he didn't answer the phone. But 2 times this week he didn't answer. And then when he answered this morning, and he was so weak he could barely talk. So, Lord, we just pray for John right now. We've already prayed today, but we'll pray again. Lord, he needs your healing touch by the power of the Holy Spirit. Whatever doctor, whatever pharmacist, whoever is caring for him, we ask that you care for him. By the power of your Spirit, touch him, anoint him, heal him, God. This has been it's been a long time. He needs your help. In Jesus' name, amen. Okay. All right, so looking for Garrett. I don't see him yet. So he's probably still trying to log in. All right. Let's go back and look at our daily chart again. If you got any questions about anything, put them in the chat box as we wait on Garrett. Okay, remember we identified red and falling resistance. Now, if buyers can overcome red and falling, I mean, see, they could spike it and it still fails, right? So, looking left, we've got the high of this day, 38.75, and the high of this day, 44.5. If buyers could overcome all of that, then Sunday night they can make a run at the all-time historic intraday high. If they fail here, then Sunday night could give us a leg. But Sunday night when Globex opens, okay, if the market starts dropping, don't forget about all this support here. This is chock full of support potential. So I'm not saying don't short Sunday night. I'm just saying make sure that if you're short, you are aware of all the multiple areas here. You got the daily BBC. That's support. You'll have the step line first. You'll have the daily BBC. Then you've got these fibs in here. And then you've got this low and this low. You've got this bullish cross. Okay, it's been spiked once. So it's not as important as if it had never been tested. I mean, yesterday, really an interesting study in how that red candle became. We had a red candle all the way down to the 50% fib, and the session ended that bullish. This session could do the same thing in reverse. We got a big, beautiful green candle. If sellers choose, I mean, if buyers choose to stop buying here at this area, we could end the session with a red candle. Not a forecast, just an observation. Okay. All right, I hurried through the recap. Let me just call him and remind him it's time. $6 billion in BTC options expire today. Largest.
Hello?
Hey, you ready?
Yeah, I am.
All right.
Give me just a couple minutes, okay?
All right, buddy.
Thank you.
Okay. $6 billion options expiration. Largest ever. Going to be interesting to see how that plays out. Let's go back to our 30-minute chart on the S&P. Still fighting the good fight. If we overcome this area, and I do an alert up here, keep in mind those previous daily swing highs. Okay. Here's the daily again. Now we got a weekly zone at 39.50/51, and of course we expect that to be good resistance. So prove it otherwise. And so you've got red and falling, and you've got the high of this day, and then the high of this day, and then the weekly zone at 50.51. Price goes from zone to zone, back to the zone, up to the zone, up to the zone. This pullback, the pullback held, so send us back to the zone. This pullback held, send us back to the zone. Think of the zones. Now, if you see a yellow one, that means it's a previous weekly zone. The zones are published Monday morning, 6:15 a.m. Eastern. We've published them since December 14th of 2009. Get those on your chart as quick as you can Monday morning. But don't throw out previous weekly zones. You don't have to have all the zones on your chart at one time, cluttering things up. But you want to have them for reference, because Sunday night, Logic is using the previous weekly zones, and then the previous weekly zones tend to hold sway over the market Monday into Tuesday, and you'll start to see the new zones take control and hold sway over the market. And so whether you choose to color code them like I do, or maybe just keep them on a notepad, they're important, so hang on to them. Okay, there's Garrett. Hey Garrett, welcome to the show.
Hi, how did you know I was here?
I looked in the staff area and I saw your name.
There you go.
Sounds like you're a little far away from your microphone. Can you pull it in a little bit closer?
I can change that. How's that?
That's better.
Is that better?
That's better. If you can get just a little bit closer, that would be even better.
You know what? Let me try my volume. How about that? Does that make it?
I don't think.
No?
I think the volume button only changes what you hear. It doesn't change the loudness of your voice.
How about there?
Oh, that's perfect. Yeah, that's good.
Oh, good.
You
Okay.
hit the high note.
Yeah,
Very good.
yeah, this I've got a new mic.
What kind did you get?
I got the same kind as I did before, and now which it doesn't answer your question, but hang on. Cyber Acoustics.
I've had that brand before.
Yeah, and this one, the other one was fine, and and it's a pretty good price, and I had it near my desk drawers, and so every once in a while it would get caught in the drawer and things, and that doesn't help your
the best
your
one I
line
ever
very
had,
well.
I sucked up in the vacuum one day. I was cleaning my office. No good deed goes unpunished. I'm back in my office trying to be a good citizen, and all of a sudden, I'm like, no!
Oh, yeah.
And then I went online and tried to buy that same model because it was the best I ever had. I probably have 50 hanging around. My office is like a headset museum. They're just hanging around. But all the ones I ever owned, I've had $300 ones. I've had $20 ones. The one that got sucked up in the vacuum was a $20 drugstore headphone. I bought it at like a Walgreens or a CVS, and it's that brand you just mentioned. And when I tried to buy another one just like it, they no longer had that model. So
Huh.
I stopped
Yeah,
crying after a couple of days. It was no big deal.
So yeah, well, I shouldn't say that. I guess I was going to say I've been pretty pleased with it so far, but the reality is I don't hear me. So I guess the the one I got to ask is you, and if it's coming
today,
through clearly.
this afternoon, just go to youtube.com/CFRN, and then fast forward 45 minutes or an hour and 20 minutes into the show, and you can hear yourself.
Oh, good. I actually haven't done that. Maybe I don't like to hear myself.
While you're there, hit the subscribe button. For
Yeah.
2 reasons. It helps more people
Yeah,
find
there
us.
you go.
And
I'll
anytime we go live, you'll be notified.
I'll definitely do that. I have
Got some charts?
what I think is some interesting stuff for you today.
Okay,
Yeah.
let me send you
just,
let me send you
nothing-
the screens. There you go.
Now, I think what I'll do, I do have something I want to show you that I'll come back to, but for a moment, I wanted to go to my big picture stuff here. Can you see the screen?
Oh yeah, I can see it good. S&P 500 cash index.
Yeah, I haven't, looks like I haven't kept my signals up on this, but this is a weekly. And Let's see. Let's minimize.
We
this
have the
down.
potential to have a monthly bearish engulfing candle
Oh, really?
at the close of this month. There's a green body on the monthly candle, but we've exceeded last month's high and we've exceeded last month's low. And a couple days ago, it was a red body. Now it's gone to a green body. But for reasons that I've already gone over with the audience, we see potential resistance overhead. So it's possible that when we close out the month next week, it could be a red body and a bearish engulfing candle, and we could be headed for a nice little sell-off.
Well, I had many years ago with a fellow named Ian McAvity, I did a study on full moons and their effect on the market. And the main thing that came out of that study was that if your market was seriously overbought, I was going to say overvalued, but overbought, and you're coming in to a day or a weekend or whatever with the full moon, that just kicks the probability up that you're going to get a correction. And it used to be uncanny, and it probably still is to some degree. We just haven't been, and we're not overbought now. It's the most overvalued market in history, more so than 2000. Some of the things, though, if you look at the weekly, the reason I wanted to go here is you've had this dramatic move from March up until currently. This whole time you haven't had a divergent sell signal, a weekly divergent sell signal from going back basically a year ago. You had a divergence here and a divergent on the indicator, but you didn't make a higher high here. So that's not it's a sell signal. It's just not a divergent sell signal. And as we've come forward, we still haven't had one. And then all of a sudden, this would be close here. Let me see what that reading is. I'm looking at 312. I just don't think this made it. And that's, well, you know what? Look at that, 312, and this is 311. You've got one right there. Mm-hmm. And then you come over here. And again, though, that's not it's at a prior high there. We're not at another. Yeah, you do have one there, and look what happened. It doesn't look like much, but you've got you've got one right there, and you're looking at a price high of 38.61, mm-hmm. and sometime within the next week, you got down to 36.94. So there's nothing wrong with that. That's a pretty good drop. Mm-hmm. It's not a big deal on a weekly chart, but if you're trading that, you get 100 and some points on the S&P, you're probably having a good day. That's a good day. Anyway, you came back with a buy signal here, and then you came up to this high here, and this again, we're coming off this reading here, and you're looking at that's 315 and change, and it's your prior one over here, your 311, 312 here. Again, you've got it. You have a sell signal here with this lower bar right here, but you're not getting a true divergence there. It's very, very close. Nonetheless, the high over here was 39.50, and you got down here to 37.23. So 225 points is pretty good sell signal. And once again, though, here back at the high last week, you got a very clear divergent sell signal. And you're looking at this period right here, so you can see this reading here and this period down here. It's a big time divergent sell signal. So this is a very meaningful sell signal here on the weekly. And again, they're pretty rare, and when you get them and you're up near the upper Bollinger Band on the weekly, and you've had this kind of a move without any kind of a real correction other than
Yeah,
this
no,
one
that's a
in
very
here.
bullish context there. Absolutely is.
Yeah, so you've got something that's saying if you want to start paying attention closely, this is probably a pretty good time to do it. That's a real warning. Now, on the shorter term, because I'm at the moment I'm bullish between now and probably April 6th. I mean, unless something else
Really?
happens, but
Okay.
I'm concerned about this weekend. And so, as I say, I'm bullish.
Did you say this weekend?
Yeah,
You
because
expect
we've got
some kind of news to come out or something? Or?
no. The thing that's happened here is, like I say, if we were overbought, and let me show you why we're not. If you take a look at, well, here's the weekly. And let's just look at the stochastic. You've corrected here from that top. I mean, we had a good top. There's an opportunity to make a lot of money on the short side, but we've pulled down here, and we're kind of in middle ground. And from the looks of the RSI, which turned up with an ABC and turned up, this is probably going to turn up.
That looks
and
like that little hook there on that red line on your stochastic. It looks like it's actually, instead of running alongside of the blue line, it's starting to cup underneath it.
Yeah.
I mean, it hasn't happened yet, but the potential.
Right.
I see what you're saying, and I just hopefully everybody else
I
sees
think
that
it's
too.
going to do. Look at this.
Not that we use
Here
stochastics,
you've got an ABC down here in your RSI. Now, a lot of people don't do technical analysis on indicators, but I do. Here you have a peak here. You got a 1, 2, 3, 4, 5 wave down. It turns up. When this goes through here, you're gonna have a buy. You're gonna have a confirmed buy signal on the daily. I think this will turn up at that time. I've got a buy signal on mine here. It's hard to see, but here, let's make it easy to see. Okay. How do you get a buy signal on that? Theoretically, this line should be flattening. This yellow line here is higher. That's a buy, and the reversal of this red to a shorter level is a buy signal. So I got a daily buy signal yesterday. So that's where that is.
Well, yesterday we hit the 50% fib of the last leg up on the daily chart.
And if you noticed, when we were coming down from that top, we hit the 382 exactly as well, right on the money, and it turned and got a pretty good rally off the 382. Then it dropped down to the 50 yesterday, right on the money again, and rallied immediately up to the 382.
Yep.
Consolidated a little bit, and we're above that now.
Yep.
So that's exactly right. Now, over here, this is hourly stuff.
Mm-hmm.
So the hourly... In what appears to be maybe your first run up, it looks like it's getting ready to maybe peak out. And what might confirm that? This is the daily, and again, you've got a buy signal here, so that's a buy signal yesterday, and here. So, playing the short side on the first day of a buy signal might be a little cavalier, but on the
that's funny.
On the 15-minute, look at this. Here's your 15-minute.
Mm-hmm.
So coming off the bottom here, I got a buy signal right there. There it is. There's a reversal on the downside, and if you wanted to wait and make sure that you were right, you got one right here.
Mm-hmm.
So right in here, you're getting a buy signal. These lines are turning. The red line's the fast line, and it's up there. So, boom, you get that quick move. And this is kind of where we are today in a sense on a bigger picture. But on the 15-minute, you get that move. And then you get one of these. Mm-hmm. You correct 50% of it. Then you get your third wave. So I didn't even look at this chart. Actually, in fact, I saw that and I thought, gee, I wonder what that is. Let me see what the time frame is. It's 15 minutes. And I looked at it and went, oh, son of a gun. I said, this market should rally to about 345 and roll over. And it rallied to, 39.45. What did I say? 345. Mm-hmm. The high was, 39.44.39. So I was close. Come on, did we make it? Let's see. no, but within a buck, and I think it's rolling over. And so I went short the IWM. I bought some IWM puts, but only because of this 1, 2, 3, 4, 5. And my guess is, maybe we get down here to this wave 4 or close to a 50%, whatever it's going to do. But I think it's just turning, and so I played the short side. But I'm going to be, and with this weekend coming up, again, if I look at the hourlies, let's go to this one. This has got the hourly window in here, and this is starting to say, and this is ready to turn. Now, this is ready to turn up on the daily, but the hour is ready to turn down. Mm-hmm. So I think it's saying that, maybe we're finishing this first wave here, and I'm going to play that to the downside, and then when it gets down here, I'm looking to go long. Mm-hmm. But with the weekend coming up, we've got, let me show you this. This is the McClellan oscillator, and you can, let's blow that up. Here's a McClellan oscillator. So here's your normal overbought and oversold, but the reality of the situation is, if you're getting up here, which is around 200, you're probably getting overbought. You don't get above that too much. If you get down here, minus 200 ish, 200 up and 200 down is pretty much overbought, oversold. Occasionally you get crazy and you get down here to minus 400 and something, but that's pretty much that's the March low. So put that into perspective. This doesn't happen very often, but you're getting set up here, I think. But you see, you're at negative numbers on your McClellan oscillator. So if I was here, let's say we were up here at 150 or 200 on the McClellan oscillator, and let's say on the 10-day AD line, which is also negative. Let's say we were up here at the 500 area like we were last week. If that were happening, and I have other things, for example, being near the upper Bollinger Band, like here. I mean, here we were last week. We were near the upper Bollinger Band. These numbers were much different. That was an okay place to go short. Right here, we're not overbought. These numbers not only are they not overbought, they're frankly in oversold territory. So I got a weekend, I got a full moon coming up, and I thought, boy, that's great, but it's probably going to be a non-event. It's probably not going to be a signal, just because everything else isn't right. I look at the relative strength on the VIX. And it's down pretty low at 42 and change. At 40 and less, it's usually a time to sell the market. And if I'm down below 40 on this, and I'm up at 500 on the AD line and 200 on this one, and I'm losing momentum, I'm going short. But that's not what's happening right now. So I was kind of excited for this weekend, and I thought, you know what? I'm probably going to be wrong, because I've got buy signals here. Two things prior to yesterday, there were two things that could be very negative for the market. One was the 7-year Treasury auction, which was a failure last week, and to have a back-to-back failure would just, put a real scare in the market. And the second thing was Biden was going to speak. And of course,
that was torturous.
Yeah, the interesting thing about him is, we have no idea what the guy's gonna say, but we know one thing. And as I looked at this, and I said, you know what, the Fed, the press, this is their guy. Trump wasn't. Trump liked things like the Constitution and freedom, and the people that are in control don't like that. They like censorship, they like control, they like removing your rights and stuff like that. So let's pay homage in one sense to those who are in control by giving them, you got to understand who's in control if you're going to try to play the game well. Whether you want them in control or not is another story. The fact of the matter is, Yeah. Fact
Who's
of the
in
matter is,
control, buyers or sellers, right?
yeah, I mean, they are in control and have been for a long time. The press hated Trump, but in reality, they should have loved him because they never had any more action than with Donald Trump. But we have, you're in the long cycle. You're constantly in the process of going from one extreme to the other. So, and those two extremes with respect to government are either freedom or control. That's the left, right, the up, down, the good, bad, the Republican, Democrat. It's one's going for freedom, and if you're going in that direction, it's a great thing, and if you're going toward control, it's not so great. But to define where we are now, we're very definitely going toward control and away from freedom, like it or not. Oddly enough, half the people like that. It's like, please tell me how that works. Well, I'm not intelligent enough, anywhere near intelligent enough to figure that out. How you can vote for control instead of freedom is beyond my pay grade. But nonetheless, that's where we are. So my point is, you got two things coming up: the Fed auction, and I thought, okay, the control guys are in control. They want to look good. Trump had a good market and he had a good economy, and he could always point to the market. So they're going to want to do that. So one way or another, they're going to make that auction look better than it is. Somehow they're going to get their buddies to buy or do whatever, and that's exactly what they did. Was it a good auction? No. Was it better than the one a week ago? Yes. Now, concern number two, it comes up. Biden is going to have a press conference. Oh my gosh. Mm-hmm. Well, he's been studying for this press conference ever since he got elected. So, and
I feel so sorry. I really, I don't agree with the guy on hardly anything, but I felt so sorry for him yesterday.
Well, I mean, he's just, he's blaming Trump for the border. It's like, that's like, I mean, it's a senseless thing to say. Now, again, you can get away with it because half of the country is, damaged mentally.
Yeah,
I mean,
we are. We, the American people, are damaged goods. End of story.
Yeah, I mean, half of the country's damaged, and he could say, he could get up there and say anything, and the press is going to back it up. The Federal Reserve will back it up, and half of America will back it up, and he can say the craziest thing in the world. I will tell you this: if Donald Trump fell 3 times on the steps and couldn't find his footing, that would be front page news, and Seth Meyers and everybody else would be making fun of him and saying this guy's too old and this and that. But Trump didn't do that. Biden did. But is anybody making fun of him? No. Where's Seth Meyers when you need him? Did he make a comment? Nope. Did the news make a comment? Nope. I will tell you that, I mean, there are times when Obama was there, and obviously Obama liked to stand next to Joe Biden because it was, the one buddy standing next to him that made him look smart by comparison. But there are things when catching Obama when his teleprompter wasn't on, where it's painful. I mean, he can't make words. He's Google Obama without teleprompter and catch his speech talking about breathalyzers and stuff. It's completely means the guy can't make any sense standing on his feet without the teleprompter, and he's significantly better than Biden. So anyway, I think what we need to do is pray for these people and ourselves in the process. But my main point here is you had 2 things coming up, and my thought would be somehow they're going to make these things look good because they want this market to go up, period. And that's what happened, and we got a buy signal because of that. And I think what's going to happen is that, remember, we're ending the first quarter. I think these people want the first quarter to look good market-wise. I don't think they want it to collapse before the end of that quarter. So this is just my 2 cents, but this is what it appears to me. So we're going to get, I think, a move into the end of this week. And the seasonality, Peter Eliades and I did a seasonality study for years and years. gaining that information. And the typical buy period, there's buy periods going back in history. Now with all the manipulation, things change. But throughout most of the time for the last 50, 60, 70, 80, 90 years, you buy at the end of one month and sell generally early in the next month, and that's the bulk of your movement for the month. Anyway, the seasonality on the switch from March to April is buying March 31st and selling April 6th. And I think that's going to work out this time. Theoretically, all you have to do is go to the end of the month, and then you've got it in the bag, and you can make things fall then. That April 1 is next Thursday. I know that because my wife is going to Hawaii with her girlfriends, and the Wrigley and I will be free to do what we want. Anyway, that's next Thursday. I believe Tuesday is the 6th. I think we have Easter over that weekend, I just learned. So you've got a Easter holiday weekend following the month, so you're probably
Okay,
going to...
so are you saying that next Friday, a week from today, will be Good Friday?
I think so. Somebody told me that, and
Well,
somebody needs to...
Sounds... Alexa, when is Good Friday?
In Arizona, Good Friday is 7 days away. Next Friday, April
Yep.
2nd.
April 2nd,
Okay.
next Friday.
There we go. So whoever told me that was right. I wasn't
Now,
aware
are
of
the
that.
markets open half day on Good Friday?
I would think so. I
You'd
think it's
think
probably
after all
half
these
day.
years I would actually remember these things, but I don't. So
I think it's probably a half day thing.
Okay.
And anyway, so when you go into holidays, when they happen and happen, after the end of a month, generally, if you're positive going into that, it's going to carry over into early the next week. And I think that's exactly what's going to happen. I think that's a strong likelihood. And I'll share one more thing with you, and then I better run. But I want to show you something that that kind of confirms that thought process. Let me see where I have it. Is it here? Yeah, there it is. A friend of mine mentioned the Apple chart to me, and I hadn't been looking at Apple, and frankly, that's not good on my part. I should have been. I look at the NASDAQ and I look at the SOX semiconductor index for leadership. And what we've had has been like a popcorn machine. One day they're leading to the upside, the next day they're leading to the downside, then they lead to the upside, and then you have a horrible situation where it actually drops for 2 days or something, that type of thing. I mean, that's really what we've been seeing. But the tech stocks have topped earlier, and they topped on that last divergent buy signal that I got right there, which is, in this case, earlier. This is the end of January, and I think that would surprise most people. Really, the mid-February top was the one that we were looking at, as right, which is right here. In this case, February 9th on Apple, but that was a secondary high. But look at the beauty of this chart. I had looked at it, and I'm kind of visual, so I thought, gee, look at that thing, and I drew a thing. I said from this low to this high, and that was a pretty good line, and I paralleled that off here and there, and I could see prices grabbing it. But I said, let's not do that. Let's just take the real trend line from the low and see how that works. Now, my thing on trend lines, most people are going to go from here to the low. My thought is, okay, that's going to catch 2 points. But I'm a trend line guy from 50 some years. So over that period of time, I've learned other ways to draw trend lines that are more effective. And that is, you try to get as many points to hit on that line as you can possibly.
As many points of contact as possible. Yeah,
exactly.
I agree with you.
And what each one of those points is doing is verifying your line as something that draws price to it. So that puts this line from here to here. Frequently, you're going to get it before a low, because whenever this isn't a good example, but lots of times this is a good example. Here's a low. Now, maybe your trend line goes through there, but lots of times you're going to go through earlier than that because this is a psychological extreme. This is, again, a bad example. You want to find something like this, maybe. Here you're coming down, and here, boom, you get an extreme, but you close higher. See? So the real part of this price line is, yeah, you ran down here when everybody got scared, but most of your action was here and this low over here. So this is probably, just as a hint, a line. This line from here to here is probably going to do you a little more good than this line in the short term going over here. But in the long term, this extreme is the one that you go to. You catch it here, it catches here. Notice that this line is before this low. This one's before this low. This catches this low right on the money. That's an important low. This is a wave 4, and your final thrust up. This is where you stop on the way down. Let's see if I can hang up on that. There we go. This is on the way down. It comes in and stops it momentarily. You're back up. You come down and test it and actually close near that, and then you break. So this is a great line. Is there a parallel to it? I always like to find a parallel. Yeah, there is. And I got to move the chart over, I guess. But you see how this, we've got all this consolidation here? I ran it where all these prices consolidated, and boom, you come right up here. Now, granted, I just, I kind of moved that to, make myself happy, but it's valid. You have lots of price here. You're very close to price here, and this is an extreme. So what I can do is move it down, and it's catching prices here and so forth. What it's saying is that this angle, whatever it is catching a lot of prices along the way. But look at the count on this. 1, 2, and then you've got 1, 2, another 1, 2, a little 1, 2, 3, 4, 5, and that makes it 1, 2, 3 on this internal line, then a 4, and then you've got a subdivided 1, 2, clear 3, 4, 5 for a 5, and you're finishing this one off on this internal wave 3. That's and that again gets your dark number here. So it's 1, 2, 3, A, B, C, 4, 1, 2, 1, 2, 3, 4, 5, 3, A, B, C, 4, 5, boom, boom, you're done. And I would venture to guess that that was a divergent signal, but let's find out. We can try my indicator or RSI. Your RSI is closer. Here's your wave 3. All the power in wave 3.
Right.
You're at the highest point here. Here you are for this wave 3, which is also strong. Wave 3s are supposed to be strong. This is a wave 3. It's strong. It's above the line. This is here. Here's wave 5. It's higher, but it's not as high as wave 3, is it? And it's not as high as this wave 3. So you got a double divergence right there. That's telling you, you know what? Go short. You're probably going to be okay. Let me remove this. Doesn't want to be removed, does it? I don't want to be removed. There we go. Here, though, 1, 2, 3, 4, 5. Wave 1. A, B, C, A, B, C, B. And I think we're going to run up here in a 5-wave move. That 5-wave move, I think, is going to take us out to next Tuesday. And what's nice is we can judge it all the way along. Now, by the way, that may not happen. Maybe it just goes down, and then I'm wrong. But if it doesn't, if we do have this kind of a move, if we do extend out a little bit because they want that, beneficial look with the end of the first quarter, at least looking good, and I think they do. They're trying to get an infrastructure bill passed, so they've got to try to make things look good. Right. So I think that's going to happen, but I think it's going to set up. I think it's going to set up a fairly surprising correction. So that being said, are you looking for something that might be a fairly, you were mentioning, I believe you were mentioning the candlesticks and so forth. Did I hear that right?
In regards to the bearish engulfing monthly
Yeah,
pattern
yes.
that's potentially
Yeah.
setting up. Yeah. No, if we
Yes.
close the monthly candle with a red body, we've already exceeded the high of last month and the low of last month. Now it's just a matter of, does the candle close with a green body or a red body? It was red a couple
Okay.
days ago. Now it's green again.
Now a monthly, that's a big deal, isn't it?
It is.
Okay, look at this. 1, 2, 3, 4, 5. Look at that. Here we go. Now I happen to short the IWM, and I don't even want to look at it because it's. I don't want to jinx myself. But look at the monthly here. I'm assuming it's doing okay. As a matter of fact, let me take a quick look. Yeah, it looks like it's going down, and it was going up when I got it. So. Anyhow, going back here, this is a monthly, and I should look what's happened. We're hugging this upper Bollinger Band. We're up there right now. So I mean, we're just so close to a new high, and I think it would be great to be able to get that, because that gives us a week's time to get this market from being a little bit oversold to actually overbought.
Yeah.
And it doesn't have to get as overbought as it was before, because theoretically it's running out of steam here. I mean, we've rotated through everything you can possibly rotate through, and trying to do it a second time. So I mean, it's gotten pretty crazy. Look at this. You're just up here at a level not seen.
Yeah.
Look at your power. This is January of 2018. People forget how incredibly strong and relentless that move was. Couldn't even get a 3% correction. 3% corrections you usually get on a weekly basis in the old days, right?
Mm-hmm. And
now you wait.
Part of something that you may not be factoring in is today we have $6 billion of Bitcoin options expiring. Options expiration, wow. 6 billion, largest ever.
Wow.
And so, I mean, more and more that has to be factored into. I mean, we used to say things like, okay, well, if the S&P is going up, then gold's going down. And you could live and trade by that for many years, but this last year, we've seen so many occasions where they're not trading in opposite directions. They're actually trading in tandem. And more and more often, Bitcoin is being factored into the equation because a flight to safety used to mean gold. Well, now it means gold and other stuff. And the other stuff is getting the most attention right now, which is why gold is kind of just struggling sideways, gold and silver.
Yeah, remember the gold looked bad to me for quite a while. I mean, recently it looked negative. I know all the gold bugs were. I was
super bullish coming into this year. Super bullish on silver. On this show I said I expect to see $50 silver in March, and it hasn't happened. It just I own it. When I get it wrong, I don't sweep it under the carpet and not mention it again. Oh, it's a learning experience, and the thing is we never triggered long into the trade. We were looking to get above 30, hold a pullback to 30, to then be long into the run to 50, and every time we get near 30, we shy away. And today I think we're down under 25.
Yeah, I think it's premature, and I'll tell you why. One of the things that, again, when the gold, I think I've said this on your show, if I had $5 for every time I heard that gold and silver were going to go to
right.
$50 or $10,000, and obviously that's an exaggeration. But I was one of the first guys in the country to be a bull on gold. I was doing that when it was $35 an ounce. I was at Merrill Lynch, and I will tell you that Merrill Lynch was deeply underwhelmed. the fact that they had a gold bull. When I was doing this, nobody even looked at gold. I mean, it's hard to imagine today, but no, gold was, anything in the world got more attention than gold, because gold was something that was never even considered, for the simple reason is that it was a staple. It was as stable and a staple. It was $35 an ounce. That's what it was. That's what it had been for multi-decades. And it's always $35 an ounce. It will never leave $35 an ounce. And what in the world is wrong with you, young man, for buying gold stocks? Nobody buys gold stocks. I mean, literally, that's where I was when I did that. This is before Howard Ruff. Howard Ruff retired 15 years ago. Right. Dines was there. None of these guys. Doug Casey. Nobody ever heard of him then. Unknown. He wasn't talking about gold. He wasn't in that run. Lots of people weren't there. All your gold people now, virtually none of them. Jim Sinclair, Dines, and then it gets hard to come up with another name. There were other names, but it's hard to think of them. But the point is, you mentioned the market going up, gold going down, and it's kind of like it's all. When people ask me that, I go, when are you talking about? I mean, most of the time they're talking about now. But I said, if you're not talking about now, I said, tell me when you're talking about, so I can mentally plug it into my mind as to where we were in the cycle at that time, and that'll give you your answer. And here's the reason. It's different. If you're in a runaway inflation, it's different. You know what happens then? Gold goes up, the market goes up, the dollar goes up. Oh my gosh, how can that happen? I said, I don't know, but go look at it. Now again, gold had already peaked. I'm talking the dollar went up and peaked in 1985. That was 5 years after gold topped, but it was 3 years after gold bottomed too, wasn't it? Yeah. Gold topped in January of 1980. I literally sold the day of the top. It dropped down to 288 in 1982, but you had that runaway inflation leading into that time, and this is a good thing to talk about in the moment, because people do have that tendency to say, gee, the market goes up, gold goes down. Realistically, it should be interest rates. Interest rates go up, gold goes down. But even that's not true, because what happens when you have inflation? Well, interest rates go up, right? What's gold do? Goes up too. See, so you got to know. In deflation, is that true? No, it's false. but it's kind of like going to a graduate school or a business class where you're talking about what do we do to stimulate the economy, other than stimulus wasn't something that was done. Nobody had QE. Nobody knew what it was.
The incredible Fed and their Xerox machine.
Yeah, exactly. Nobody knew what those things were, and nobody knew about zero interest rate policy. The question would have been, zero interest rates, you got to be out of your mind. That's the value of money. You can't say money's worth nothing. And you go, oh, gee, you haven't met... Anyway, I won't go there. But here's the point. If you were to ask a question to a business class, and you say, we need to stimulate the economy, what type of things can we do? And all the hands go up, and you call on one of them, and you say, well, you expand the money supply. Go, yeah, you can do that. And the other hand goes, yeah, what do you do? Well, you cut interest rates. Yep. Yep.
Reduce the price of gas at the pump. That affects every American.
You do that. You cut your taxes. You do exactly. So those are all the things you do. Now, let me ask you this: what happens if you're in a runaway inflation, like during the late 70s, and you expand the money supply, or you cut rates? Well, you're throwing kerosene on a fire, aren't you? In other words, you got a problem with a runaway inflation. The last thing in the world you want to do is expand the money supply, and you sure as heck don't want to. Lower interest rates, because, like I say, you're throwing kerosene on a fire that you're trying to put out. Trying to put it out with kerosene instead of water. So the point is, it depends on where you are in the cycle. And what was going on recently with gold that nobody looked at, I don't think, is the dollar. Mm-hmm. Nobody looked at the dollar. Everybody said, look at all these things. You go on the internet, there'll be 50 people telling you about the Great Reset. There's not going to be any more cash. All this. Now, is that true? I don't know. I mean, maybe. I know that's what they want to do. They want to completely control us. And one of the ways to do that is get everybody vaccinated, number one. And number two, and it'll probably at some point dumb them down a little bit more. And then we'll take away their money and talk them into having a digital currency. We'll sell the idea that, hey, look, it makes things easy. It doesn't have nothing to do about being easy. That's not what it's about. It's about control. It's about controlling you and controlling your money. Period. But they won't sell it that way because that's not a good sales pitch. The sales pitch is, gee, it'll make your life easy. You won't have to think about this. Look how easy it is to pay with Apple Pay. Hey, no problem. Doesn't everybody love Bitcoin? Yes. And whoever's telling you this, as they're talking, they're nodding their head up and down. So you're watching them, and pretty soon your head's nodding up and down. Yeah. And that's. I mean, on a simple level, that's what I'm saying. I'm making a joke, but I'm telling you the truth. That's the truth. But the other thing that happened here is the dollar. And the dollar has gained strength quietly, but and that's, I believe, what got in the way of gold. Strong dollar in this market. If it's a runaway inflation, different story maybe, but it's not a runaway inflation yet. They're playing with that, and that's what I think brought gold down. But I think probably after this correction, if we have it somewhere in there, I think you're going to get maybe a price on gold and silver that you just aren't going to believe, and then you're going to get your buying opportunity. I think you're going to like that buying opportunity even better than the one that looked like it was going to happen, more recently. So anyway, let me know on that. I got to remember to call you on the monthly signal, because okay. I think we're setting up something here that might be certainly bigger than what we've seen for a while. Okay. I think that potential is there. So we'll have a chance to.
Thanks so much for coming on the show today. Appreciate it as always.
Yeah, thank you for letting me share some time with you and the folks, and I wish everybody, hope everybody has a great weekend, and make sure to go out and enjoy that. Make sure to go out and enjoy that full moon.
Amen. Give me a call over the weekend if you want to talk.
I will. I want to do. I wanted to talk to you about that Telegram too, so I can get.
We'll get you squared away.
So I can learn how to operate it a little bit more effectively than I've done so far.
Can you see my chart, Garrett?
I can.
Yeah. Guys, look what happened while we're talking to Garrett. Red and falling. Remember the huge green candle was there just a few minutes ago. And we said resistance. We have now dropped from 39.30. It's about a 15-point drop. Let's look at it on our 30 minutes. Here we go. We highlighted this on the 30-minute. Remember, guys, I put the little rectangle, and I said, okay, look out. And
oh, boy, look at that. Yeah. See, that's exactly what I was seeing on the 15-minute. You can see clear 5 waves in there.
Now, we got potential support. We got potential support at this bullish cross, 39.12. So I'll put an alert out, guys, to be short 39.02 to 3900 to 38.98. So there's a nice 4-point trade down here if sellers keep their foot on the gas. Now, up here, what happened is buyers simply stopped buying. Okay, the swing high was 39.33.75. No, the swing high was 39.34. Why was that the swing high? Because nobody was willing to pay 39.34 1/4. If one person, one brand new trader who accidentally got into his live account instead of his simulator, and he accidentally hit the wrong button, if he had bought one contract at 39.34 1/4, that would be the high, but it's not. nobody was willing to pay 39, 34 and a quarter. Now,
By the way,
you
Dwayne,
watch Kramer this afternoon, or watch any of the other financial shows. They're going to give you all these deep, complicated reasons why this was the high of the day. I just told you the real reason that was the high of the day. There were orders in the DOM. People were trying to sell this contract at 39, 34 and a quarter, but nobody took them up on the offer. Buyers stopped buying. Sellers came out of the woodwork, and now they're doing what sellers do. There's institutions, there's ETFs out there that specialize. They only short the market. So anyway, go ahead, Garrett.
oh, I was just going to say, yeah, you're looking at to go down to about 39.12.
I think we potentially see. Well, there's support at 30. There's potential support at 39.12, right where the bullish cross happens.
Yeah, I may
And
have
then
to
the next
jump
level
off.
of support is at 39.05. Next level of support. But what we're going to trade is we're going to trade this little area down here.
I like to sell into the froth, so I may jump off and take a look
Okay,
here.
buddy.
But thanks so much.
You bet.
Appreciate it.
Have a
Everybody
great
have a
weekend.
everybody
I'll
have
talk
a
to you.
nice weekend.
Okay.
Okay.
Bye-bye.
Thanks, pal.
All right, guys, here we go. This is how it happens, live in real time. Okay. Now, if you had just been watching your 30-minute chart, you'd be scratching your head. What happened? This is why multiple time frames are important. Okay. Start your day, start your trading session by going to the daily chart, identifying where potential resistance is and where potential support is. Okay. Our potential resistance has been proven out, at least on the first attempt. Okay, so now it's support. Step line, low of day, BBC, and then this 24% Fibonacci price extension, this 38% Fibonacci price retracement. So the reasons for support that held the market up all week are still there. But the market has clearly shown us where resistance is, red and falling. Okay. Now, everything that we teach you is fluid across all markets, all time frames. What you just saw happen with the S&P, it's not exclusive to the S&P. Price flows the same way on the S&P as it does on crude, as it does on a 1 minute, as it does on a monthly, as it does on a range or a volume chart. It goes from support to resistance, back to support, back to resistance in a never-ending cycle. And once you can identify that cycle, once you can hear the rhythm of the market, once you can feel the rhythm of the market, you just 1, 2, 3, you step in and you do the electric slide till you get your goal for the day or hit your target. Then you hang up your spurs. Go home for the day. Live life. Okay. Here, let me just put that alert in the channel now. Otherwise, I'll hang up my headphone and forget. And then we'll go to our good word for the day, and then you'll be dismissed for the weekend. Okay, so this will be alert number 6988. Number 6988. ESM 21. Okay, so we're coming into potential support. And then, now if you wanted to trade 3908 to 3906, you could do that. I'm just gonna, let me see that. Wow. All right, 3900. 3901 to 38.99. Yeah, not much of a trade, but I was busy doing radio. Copy text, paste. Did not have my full attention. Okay, see it trying to hold there. You've got a bullish cross, you got a swing low, you got a swing low. So if this easily overcomes that potential support, then you really might consider 3908 to 3906 to 39.02 to the zone. Because of something that most traders never saw, okay? Daily red and falling. Daily red and falling. The market does the next high probability thing. Most of the time, that's why it's called the high probability thing. We know from almost 7,000 logic alerts and 138 weeks, we know that about 20% of the time the market does do something other than the next high probability thing. And it's that little 20% where it does something else that keeps most traders spinning in circles, always looking for that holy grail. Always, because, man, oh man, it's got to be out there somewhere. No, it doesn't have to be out there. If it was out there, it would defy the laws of science, physics, and God. So, I don't want to tug on Superman's cape or spit in the wind. I'll just go with the flow. And I hope you'll join us. If you want to become part of the family, if you want to be in the trenches with us, Sunday night when the Globex market's open at 6 p.m. Eastern. Go to Emini. If you want to get Monday's trading done Sunday night, go to EminiFuturesTrading.com. EminiFuturesTrading.com. Okay, good word for the day. Ecclesiastes 2:18 says, I must leave to others everything I have earned. Huh? Okay, here it is in the ESV version. I hated all my toil in which I toil under the sun, seeing that I must leave it to the man who will come after me. Have you ever wondered who will live in your house 100 years from now? Maybe you've left them little hidden messages somewhere. Something fun that one of their kids might discover 75 years from now. Huh? You ever do that? Ever wonder? Ever think about such stuff? Apparently I do. If you work harder, you can earn more money, but you can't earn more time. To coin a popular song, time may be money, but your money won't buy time. There's an old story about a man who worked the late shift at a factory and walked home just after midnight. One night he took a shortcut through the cemetery. Failing to notice the new grave that had just been dug, he fell into it. After several unsuccessful attempts to get out, he just decided to relax until morning, when somebody would come around and help him out. So he sat in the corner of the grave, half asleep, and a fellow traveler who had overindulged at a local bar stumbled in beside him. Desperate to get out, the drunk started yelling and clawing frantically at the sides. At that point, our hero reached out and touched him gently on the leg and said, "It's no use, friend. I've tried. You'll never get out of here." Not surprisingly, the drunk did. He jumped out. A periodic visit to the local cemetery might help you reevaluate and reprioritize your life. For example, it might encourage you to stop and ask yourself what you're really living for. In Ecclesiastes 2:18, Solomon had an aha moment. All my work, all my hard work here on earth, I must leave to other people who didn't do the work everything I have earned. A rut is simply a grave with the ends kicked out. Don't just make a living. Get out of your rut and make a difference. Don't just leave an inheritance. Leave a legacy that will enrich the lives of those who follow you. And that's our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.